Hello, hello. We were having an interesting discussion about PayPal in our Discord channel today, and I thought it's a good opportunity to take a fresh look at the company. It's been a while since I last made a video about it, and it's been going down. If you take a look at its 6-month chart, you will notice the downwards trajectory. This is a downtrend, a lower low, another lower low, lower low, lower low, lower low. And when this happens, you could be looking at a company going down for a while. Again, it has to do with sentiment for the most part, but also it may have to do with actualities, things that are actually happening around the company. And in fact, it does. We're going to examine this in our video, as well as the financials, of course, using our tool as usual. Now, let's take a look at what has been happening. A very controversial misinformation policy fine that PayPal wanted to impose. And because there was an outcry, severe outcry actually from people, they had to take it back, claiming that it was a mistake, an error in their policy. Of course, that's not true, but they had to say something in order to, to appear as if it was a mistake and not what they actually wanted to do. And so this was a big thing here, and people were really, really cautious about it, and we're talking about it a lot on the internet, pretty much online. I saw a lot of stuff about it, especially on Reddit, which has a lot of people talking about these things. And yeah, they had to take it back. But there is more to the story of PayPal potentially going down in terms of its stock price, maybe. The fact that Apple seems to be eating PayPal's lunch, for instance, here, because Apple Pay soared in November, while the use of PayPal in traditional payment methods sank. Now, that doesn't mean that PayPal, of course, is going to lose business, definitely not. But it could lose part of their market share. That could happen. They could still be one of the valid ones, but they could still lose a lot of market share, especially to the likes of Apple. And also another one, something that was mentioned in our Discord channel, the fact that Elon Musk hints of building payment app to compete with PayPal. And Twitter owner Elon Musk claimed that the PayPal had turned into an episode of the British television program Black Mirror, and that has a lot to do with censorship, misinformation, and all the things that were talked about in regards to PayPal. And as you'll see here, he says that it's going to be great what he's going to be creating in terms of a payment system here. Very, very interesting piece of news. And he said his idea about a new payment system, as you'll see here. Trying to get a big chunk of the market share of PayPal because, they have been becoming sort of like a Black Mirror episode. It is a critic that I definitely agree with. PayPal is becoming more and more a censorship type company, and I'm pretty sure people won't like that. And yeah, this may be a fine opportunity indeed for Musk to actually work around creating another solution here as a payment system. Regardless of what we feel about PayPal, it's not about the feels, it's about what is actually happening in the real economy and what is happening with PayPal and their economics. Because, when stock is going down, it may be a great opportunity. It may be extra risk, but it may be a great opportunity as well. Which is the case here? What is the case here? Let's examine that in more detail by taking a look at the financials. The P/E ratio of the company is sitting at 37 here. It's not very low, but it's not as high as it used to be. Remember, it was near 60, 65 over here and more. So right now it's almost half that, and it's actually becoming a little bit appealing. In terms of the price to free cash flow, things are even better here. Again, from something like 55 going down to 15 over here. It's nice to see. Outstanding shares that are going down as well, another good sign because the company is buying back shares. Awesome to see. They do have some extra liabilities here, more than I would like to see in regards to their free cash flow. About 10 years of free cash flow have to be dedicated in order to pay back the total liabilities that they have. That's last year's free cash flow. And the revenue growth and all the other income growth, free cash flow growth, total equity growth numbers are all positive. And their total equity growth is still positive even as they are buying back shares, which means that they're making money, of course. And you can kind of see it reflected. In terms of their margins, you will see here that they are going down recently. Again, this is the most recent quarters. A lot of businesses are actually having this problem right now. The economy actually did hurt quite significantly in the past few months. So it's understandable that you could have some lower performance here for many companies. So that wouldn't concern me that much. However, I'm going to take this into account when I'm going to be using our discounted cash flow model. So I'm going to go a little bit lower because of this. In terms of the financial statements here, the income statement of the company, 13 billion to 25, basically doubling their revenues here in a matter of 5 years, is very, very nice to see, and pretty good growth, almost 18% every year, or I should say the average seems like it's about 18%. And in terms of the net income, from 1.7 billion to 4.1, that is more than doubling actually their net income here. Pretty nice numbers to see. And in terms of the balance sheet of the company, you will notice that their total equity is sitting at 21 billion, again getting increased from the 16 billion that it used to be 5 years ago. And the liabilities of the company is sitting at 54 billion. So quite a few liabilities here is the thing that you need to notice about PayPal. They do have quite a few liabilities, and especially when you compare them, remember, to the free cash flow, it's about 10 years, so it's 5, as you would expect, since 55 is the about liabilities. So yeah, the free cash flow that they generate is about 10 years that you would require to reserve in order to pay back all the cash flow, all the liabilities. So that's quite significant liabilities that the company has. Is interesting to notice. And in terms of the operating cash flow, it becomes 6.3 billion after the adjustments, of course, for stock-based compensation, depreciation, amortization, and the likes. And an extra item here, the other non-cash item, that is a one-off. And as you'll see, the capital expenditures are at about $1 billion with purchases of investments of $40 billion. So quite a significant investments over here. And also selling some in the process. Still a net buyer, it looks like. This and the previous year as well. That is fiscal 2021. And the cash that they have at the end of the period, about $18 billion. Now, what about the actual price to pay for the company? What is it worth? In order to discover what the company is worth, of course, we're going to use our tool, our stock evaluation tool. This is not a company that is paying dividends, which means that we're going to be using the discounted cash flow model alone. And remember what I told you, the revenue growth of the company has been an average of $18.6 billion, which means, and then the revenue growth is 18.5%, I mean, and 18.6 is the average, 5-year average revenue. So 18%, 18 to 18.5% in terms of revenue growth. We are not going to go that high. Of course, we're going to be more conservative. We're going to go 8, 10, and 12 here. And the net income margin that we're going to use, again, remember, it has been going down a little bit recently. Now, it tends to be sitting at about 15 to 16. I'm going to go a little bit lower, 12, 14, and 16 here, see what we get out of this. And the free cash flow margins tend to be more than 100%, about 110, 115. I'm going to go 105, 110, and 115 over here. And an annual return of 13% is what I typically ask for. Now let's hit calculate and see what we get out of this one. And you will see that the high one is green, sitting at about $90 with a current price at 72 right now. The medium is 68, which is fairly close to the current price as well. And the low one is 52, 51.8, which is a little bit far, but not like disgustingly far from this current price. And remember, these numbers are fairly normal. They are, they are not too weird. They are not too aggressive. They seem like fairly normal numbers, and they could actually be even a little bit conservative in some situations, especially the margins here. Maybe the company does what it usually does in the next 5 years, like 16%, it would potentially make sense. So, as I'm seeing it right now, the company is an interesting case for a potential buy. But I do feel that there may be a chance of a better price here. I do believe that there are potentially even better opportunities right now in the market. Yet this one is not negligible. It could be one that it makes some sense to accumulate a bit of at this current price. It's not bad at all. Yet you always have to remember the risks that we talked about. What is happening right now with Apple Pay, what is happening right now with the movement that PayPal has in regards to censorship, which could actually deter people from using it, as it's actually down significantly more even right now as I'm making this video. And also the fact that Elon Musk could be getting in the game. So, all these things could account for the company going down even lower potentially. So that's what I would want to wait and see. In fact, I would probably be more interested in buying this one near the 60s, near the lower 60s or something of that sort. I think it's possible that this company will actually reach there. Maybe not, who knows? But it's definitely not a bad buy even here for, again, for a long-term period, for a long-term hold. If you believe that the company will continue to stay competitive and will not be harassed by Apple Pay and Elon Musk and all the things that we talked about in this video, at least not much. Thanks for watching. Remember to leave a like, that helps a ton. And of course, subscribe if you're not a subscriber already. I'll see you in the next video. Bye bye.